Thank you for joining us in this presentation, which forms part of the 2012 superannuation update for trustees of SMSFs. My name is Mel Holsworth from Holsworth Law & Associates, and I am the principal of this firm. Just the usual disclaimer that comes up that we need to attend to in relation to any advice that we're giving you at this time. Please note that it is general advice only and doesn't take into account any of your specific circumstances. Be also aware that the tax and SIS regulations are constantly changing, so please seek specialist and timely advice before making any decisions relating to your financial future. And please note that some of the details within this particular presentation are under review at this time and may change in the future. So this forms one of the presentations as part of the nest of 7 presentations I'm making in relation to contributions. This is presentation number 5, Payment of Self-Managed Superannuation Fund out-of-pocket expenses that haven't been reimbursed by the super fund. I've done other presentations on timing, concessional and non-concessional contributions, also contributions made in kind or in specie, and the 30% contributions tax, which is new for those with notional earnings over 300k, and there's a very small presentation on the ever-shrinking government co-contributions. So just so I give you a little bit of an overview of what this one's about. The ATO's ruling on contributions, TR 2010-1, once again gives us some light from the Commissioner's viewpoint on how he looks at unreimbursed expenses. So an example of unreimbursed expenses, I'll use myself again, that Mel paid for the insurance policies out of my own funds and not from the bank account of the super fund, and I didn't seek reimbursement from the superannuation fund either. So the payment of those expenses, albeit it's a superannuation fund expense, was actually met by me and not by the superannuation fund. So in effect, I've actually made a non-concessional contribution to the fund. So usually expenses are journaled into the fund. When we know about them, we will debit the expense and we will credit the member's account, whoever met those expenses, or if they're met by a number of members, then we'll credit each member with their particular amount. Some of the examples that I see of unreimbursed expenses include the internet fees for those who are doing trading from home and stock exchange work, etc. Insurance premiums on death and TPD insurance, seminar fees, accounting and audit fees, parking whilst attending seminars. That's just a common example of fees that may be incurred by members that they don't seek reimbursement from the superannuation fund for. There's a couple of traps. First one is if you're seeking to have the out-of-pocket expense actually repaid by the super fund. In other words, you're not wanting to make a journalised contribution, but actually seeking reimbursement from the fund. This needs to be done most quickly after the expense is incurred. If you leave it too long, it'll be deemed to be a loan, and of course under Section 64 this is not correct. That the superannuation fund is not permitted to make a loan, and so yes, if you're seeking reimbursement, either do it quickly or don't seek reimbursement at all and treat it as a contribution. Another trap is that sometimes journal contributions for these unreimbursed out-of-pocket expenses, when you add them together with the cash contributions, they can sometimes exceed the contributions cap. And of course there are sometimes some issues in relation to GST on the expense, especially if the superannuation fund is a GST registered and reporting. It means that the tax invoice would be not in the name of the superannuation fund. Consequently, the GST that is paid on the expense which has been journaled into the fund, the GST on that expense would not be claimable by the superannuation fund because the tax invoice or the receipt would not be in the name of the superannuation fund. And so there could be some GST issues in that regard. Thank you very much for listening to this presentation.